Welcome to the Times of Industry show. I'm here today with Christopher Marchese. Christopher is a first-time guest, and this will be a very good interview because I plan to ask some tough questions. Christopher is a silver expert. He's a mining and precious metals analyst. Works for the Morgan Report over there with David Morgan, our good friend, and he's the co-founder and director of Lemuria Royalties. Currently a private company, but definitely watch for that thing to go public in the near future. Christopher, how are you today?
Good, great to be with you.
Listen, I had a very good chat with you pre-interview, and we basically talked about this period of June 15th being very important for precious metals investors. Wealth Research Group was founded at early 2016. We saw that the Fed first raised rates for the first time, so they hiked rates after like 8 years, right? So Wealth Research Group was founded because we knew that the market was rolling over and precious metal stocks will have a very good chance of trending higher. And we had a very good 2016. It's becoming a very different type of market here in 2017. And it looks like the Fed are going to raise rates again June 15th. The odds are over 90% right now. I think it's 95% the last survey. That means the economy in the U.S. is getting better. Some obviously say that we're talking some governmental publishments, so many things are rigged or not calculated correctly, etc. Nonetheless, definitely a changing environment for precious metals and for precious metals investors. What do you see happening throughout the year if the Fed raises rates again? How do you see this affecting precious metals? Because obviously inflation has been leveling and taming, which might suggest that the real rates are headed higher for a little while. So let's get your take on this.
Yeah, so I think the Fed they definitely will raise rates in June. They don't like to surprise the market. They basically said as much at the last meeting, but I don't think it's because the economy is doing well. It's because they want to have some ammunition once the next recession hits to lower rates. So the higher they can get it, they'll be able to have more policy tools at their disposal when the next recession hits. And,
because that's exactly what I was thinking. Good.
And so, if you look back to 1945, the average economic expansion has been 59 months. Right now, the current expansion, in quotes, is about 90 months. And, it hasn't been robust growth. Like you said, there's a lot of doctored numbers. They changed the way GDP is calculated, hedonic weighting for inflation. So it's very, it's not, it doesn't depict reality very well. And
or you can say that it's definitely not something that investors can just take. You need to take it with a grain of salt.
Yeah, and you just have to look at the labor market for confirmation of this, because the unemployment rate has gone down to levels not seen in 9 or 10 years, but the labor participation rate is still very low. There's more low-paying service sector jobs. So you have to take in the qualitative factor into account when you look at the labor market.
Sure. Well, also male participation is absolutely dropping like nothing the country's ever seen. So, people are at the prime years, 25 to 49 male, are exiting the workforce. It's about 7 million people now that are outside of the system. Very interesting data. Christopher, June 15th is not only the next Fed announcement. The GDXJ has become so popular, it grew fivefold in assets in the last few years, and now it has sort of a regulatory problem where they're forced to rebalance, to sell some of their equities because they own too much of a concentrated position in small companies. So it's becoming like a, I don't know, like a $3-4 billion liquidation process where they have to change the components of the ETF. What are you seeing here? Because I've been talking to many of the top people in the mining sector, and they're telling me, look, this is going to make you puke. This is going to be like the last gasp, and after that, don't search for any more buying opportunities, historical buying opportunities, because after this happens, probably within a few months, the S&P is going to start rolling over. We're going to tilt over to recession, and you're going to see these mining shares doing what they haven't done for 6-7 years here, and start flying higher. Do you share that conviction, and are you personally taking some interest in the market right now, where it's absolutely being technically sold? A lot of the mining shares are just sold because the GDXJ must sell them.
So I think, I'm adding to positions right now, not a lot on pullbacks. I think there'll be perhaps better opportunities to add, but I don't know. If we do go into recession, we're likely going to see a decent sell-off in the market as a whole, and that should cause selling pressure in the mining stocks as well. So you might be able to get them at better prices. But things I think are going to, this is probably the last time to get really good prices for a lot of core positions and speculative positions with the GDXJ, with an almost guaranteed recession, I think, starting later this year, 2018. And you should take advantage of that. A good rule is to always keep some powder dry in case things pull back more than you expect them to, which we all know that can happen in this industry.
Sure. Chris, listen, I want to switch gears here from the macro to like more of an individual approach. You are obviously an analyst, a precious metal analyst, and I want to get your take on how you start the process of looking for your next company. How do you go about finding the best type of stock to risk your funds with?
So it all starts with the management team. It's really about people. A good management team who is running a company with subpar assets can make them look a lot better and perform a lot better than they would under an average management team, and vice versa. Bad management team can operate world-class assets terribly. So it all starts with the people. And beyond that, you want to, if you can find a good management team that has pretty good assets, you look back at their track records. Have they been able to add shareholder value at previous positions they held? And if they have great management teams or great assets, that's another bonus. And then,
do you look at skin in the game? Do you look at how much they've actually risked themselves?
That depends on how big a company you're looking at. If it's a $5 billion company, management is not going to hold any material amount.
Well, not percentage-wise.
Because they have.
Sure. Not in percentage.
Oh, yeah, definitely.
In terms of dollar terms, they can own $30-40 million worth of shares between the chairman, the CEO, and a couple of other people.
Oh, yeah, you definitely want to see that. You also want to see high quality insider ownership. Like if you see Sprott owns, a good deal of the company, or say Tocqueville Asset Management.
Sure, an institutional buyer that they do their research, they do their vetting, adds to the credibility of the company, obviously. And that they're a strategic investor as well, because they can, consult, advise, etc.
Yeah, and beyond that, that's a lot harder than it sounds, what we just went over. And then, the numbers are the easy part. If you find a company that's trading at half net asset value, good management team, good assets, that's something you'll want to buy.
So you're talking about producers, obviously.
Yeah, or even if it's a development company, late stage development company.
Sure, and just to get your personal take, do you prefer the producers and the near term producers, meaning that they're now in the last stages of developing the mine, than the very speculative exploration type?
Yeah, that's definitely my preference. I mean, that's what I specialize in. I'm not, especially because of where we are in this bull market that began in 2001. We like companies that will at least commence production before 2020.
Sure. So, Chris, in your work, when you do these mine tours and when you look at sites, etc., are you getting the feeling that it's harder and harder to find good assets?
Yeah, it is. I mean, there's more and more mines are brought online. That's why we see silver and gold production, hitting records, except for maybe the last year. And most of them aren't high quality. It's just, especially if you look at silver, most of the silver, high grade, and the majority of the silver is found nearest the Earth's crust. And, we're starting to exhaust that. I'm not saying we've reached, peak silver in quotes. But it's definitely, world-class deposits are hard to come by now. So that's why, I think it's harder in the exploration space.
Are you looking at anything outside of silver and gold, either as platinum, palladium, or outside of that at all?
Platinum, palladium, yeah, we like that. Even uraniums, and we like zinc. That's the only base metal we like, but it has good fundamentals. Even if the demand craters, there's supply issues on that. So that'll help you out a lot as compared to, say, copper.
Uranium came off of a 6-year bear market, 6 straight years of bear market. That has not happened to any commodity since 1925. Now it's up since the elections, and it looks like it's starting to break this downtrend and confirm an uptrend. Now, are you looking at a uranium bull market?
Yes, I think one will begin probably next year. I think more Japanese reactors need to be started up, so it can at least get the spot price above $30 a pound, because no one's making money here.
Okay, and so let's talk about Japan. What are they doing right now?
So they've been wanting to restart a bunch of reactors after Fukushima, and it's taken a lot longer than they had initially wanted to take. So it's going a bit slow. Because
of political problems or what, or economic?
And environmental concerns. It's just a lot of everything. People are worried about, because it seems that they always build these reactors in the most unideal places. So, but the real driver beyond Japan, like everything else, is going to be China. They have a lot of reactors that are set to come online in the next 6 to 8 years, a lot planned, and they want to go nuclear. It's going to take a while, but it should be a lead to a nice bull market in uranium.
Let's talk about the U.S. I mean, 95% of uranium in the U.S. is imported. How is that even consistent with Trump's policies of making the U.S. independent and energy independent when you have to import 95% of your uranium? Is this something that you're looking to change? Because obviously Rick Perry's the Secretary of Energy, so this is a very good situation because he was the governor of Texas. He had uranium producers at his disposal there, and so we know he's pro-uranium. What do you think about what's going on within the U.S.? I mean, 20% of U.S. homes are lit with uranium.
So I wouldn't blame Trump for what's going on in the uranium market. He's actually wants to make mining
doing the opposite. I'm saying that he will probably change the policy of previous presidents.
Yeah, and I think that'll, there's a lot of uranium projects. A lot are on standby now because they're not economic. So we could definitely get that production rate up down in terms of what we import if, it becomes easier to, permitting gets easier, prices rise because, there's not a whole lot of incentive for uranium companies to move forward at this point unless they have, an absolutely world-class deposit.
Sure. Now let's talk about the large indices. It looks like, before 2008, there were 150 individual investors 150 million individual investors in the U.S. 2008 happened. Many of them walked away from the stock market, and after 9 years of bull market, it looks like maybe we're going on 8 years and 2 months now. It looks like people are coming back in droves. It looks like the retail crowd are starting to buy back the S&P 500, starting to buy back the NASDAQ, starting to buy back the Dow. It's becoming very, very, very expensive historically, but people don't seem to mind. I mean, they're looking at stocks and they're saying, look, I get the dividend yield, which is much higher than the bond yield. I don't trust the bonds. I don't trust the treasuries. I can't look to Europe. China's problematic. I'm just going to buy U.S. equities. And it's taking these indices into very uncharted territories where the PE ratios are very, very high, where the average person's salary is you can't compare it to what you had in the 80s and 90s, where people had to work like 3-4 weeks to buy the Dow, and now it takes 27 weeks for the average salary to buy at one point in the Dow. The amazing part is it's over the Buffett indicator, which is that GDP to U.S. equities ratio, where if it goes over 1 and over 1.2, you're in bubble territory, and we are now right there. What do you see with U.S. equities right now? Do you think this can sustain or even increase for another year, another 2 years? And how will it end?
So that's a very tough question, and a lot of that is dependent on what Trump is able to do in the near term. For example, if he's able to pass some of his tax cuts, that'll definitely give a boost to more buying, because companies will make more money and become more profitable. They'll appear a little cheaper. But yeah, I don't think we'll get that far. And it's hard to say when something will top, but the Dow, for example, at 21,000 now, I think it's way overdone. But what are people going to do with their money? They're still not getting any real yield on their bank accounts. I mean, because in real terms, you net out inflation, you're losing money, purchasing power wise. So there hasn't really been anywhere to go except the stock market. There's nowhere for bond prices to go but down. because we're at historically very low rates. And I think people they have very short memories when it comes to things like this. Like 2008 should have kicked them in the butt and made them realize that no, you shouldn't have the majority of your savings in U.S. stocks. It should be spread all over. I'm talking precious metals, other real assets, real estate, and stocks, domestic and international. And 2008, we printed so much money. We've kept this easy money system going. So people have just forgotten how terrible 2008 was and how much money they lost because they made it back and then some. I mean, we were in a bubble in 2008, and I remember the Dow peaked around 14,200. The economy hasn't been great at all. I mean, and growth has been tepid. And now we're 50% higher, basically, than we were in 2008. It just doesn't make any sense.
Sure. So, Chris, where can people find more of your work?
So you can subscribe to our free newsletter at themorganreport.com. And if you like what you get, you could always go to our paid subscription. Check that out. There's you can get it free for the first month. So if you like it, then you can keep your subscription. If you don't, there's no cost to you.
Perfect. Christopher, thank you very much.
My pleasure.